Hello, traders. It's 8:04 a.m. Chicago time on Wednesday, the 19th of May, 2021. It is 8:04 a.m. This is episode number 1996. I'm running into a bit of a technical issue here, starting a little bit late. I'm unable to send out the Periscope stream. There's something going on. Um, Something going on with their servers, I guess, is what I'm getting. Can you just give me some feedback? Is my sound distorted? Am I sounding okay? Just let me know, please. Um, let's dig right into this. We have a market, so we're going to dive right into the convergent trading pre-market summary sheet. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk off this morning, very, very much risk off. The market, the S&P has moved down a fair amount, traded pretty good volume, and it's red across the board. Currently, the only thing, the safety assets are starting to creep up, risk off assets, but for a while there, the U.S. dollar was the only product that I'm monitoring that was up. Everything is being sold. Crude taking the biggest hit so far. July crude, which is the front month now, is trading at 63.57, down $1.93. I did not know that Periscope has been removed. That's nice. 63.61, $1.89, down 2.89%, 2.89% off on crude oil. Next, weakest is the Euro Stocks 50. Europe is getting hammered this morning. Euro Stocks down 97 points or 2.42%. The DAX is off 2.24%. But interestingly, silver is down half a dollar, 52 cents, or 1.83%. So you'd think money would move out of equities into metals, treasuries, things like that, as a hedge against inflation. But silver's getting hammered. The Nasdaq's off 221 points, 1.67%. The Russell's off 1.47%, 32 points. The S&P off 50 points, 1.21%. The Dow is off 362 points. The British pound is also getting hit. The euro, yen getting hit. The 10-year note just made it across the zero line and is up 2 big ticks, 4 small ticks in the futures. Yields are up. The Bund is higher by 18 cents. Gold is up $2, was negative just a minute ago, and the bonds are up 8 ticks. They were also unchanged a minute ago. And the winner today is the US dollar, up 22 and a half cents. Bitcoin and Ether pounded. Of course, these products have moved up quite a bit. So, most of the participants in there um, are probably still in the money despite a drop almost of what is it, 40% now from the high. Bitcoin was at $60,000, trading at 36,955, and taking its biggest hit here last night. So there's a lot of hemorrhaging going on. The S&P has traded 354,000 contracts since the convergent pre-market summary sheet was created. The S&P has made a further low, pushing our range even further down. The range is now 57 points instead of 48 points as it shows on the sheet, and the overnight inventory is at about as short 82%, 82%. So very clear price discovery to the short side today. We do not appear to have found in the equities. We do not appear to have found our bottom. Again, the S&P has traded 357,000 contracts, about to cross 358, with a point of control of 4089 so far, but there's really no value. All we know from the S&P is that it created a very nice little low volume node at 4094. I'll go over that. Remember, the CPI low is 4095. 4095. So yeah, I know Bitcoin's moving very fast. We're quoting the futures, um, but the cash is moving very fast. I keep getting alerts from my Edge wallet, and it's just like, you know, Bitcoin Cash is down 10% in the last hour, things like that. So let's move on to real quick look at, well, what are we expecting today? Don't forget the FOMC minutes today. Um, we do get EIA crude oil inventories at 10:30. Fed's Bostic. Remember, the Fed speakers are now important again. We need to see if they still see the current conditions as transient, or if they're seeing a firm hold by inflation on the economy, which is bad news for pretty much everybody. But Fed's Bostic at 11:35 Eastern, FOMC minutes at 2 p.m. Eastern, and then balance trade out of Japan this evening at 7:50. So let's move on to our Trader Bite from yesterday. This is what I showed. I was looking for a test of 50 below the primary scenario, test of 50 below, but hang out inside of the range and hold steady, hold that 4170 area and sit still. The secondary is a push up to 4170, a drop to 4150, consolidate, and then start walking itself down to what? The 20, right? The 20. Um, the 20 is a key target on scenario 2. So chop in the morning. Attempt to go into 4170 if possible, and then drop into 4120. We talked about this yesterday and the reasons behind it, so I'll go over that here today. Let's take a look at what we actually did. Here's what we actually did. Let me switch to a 4-tick Renko. Here's the review segment. There it is. We opened up at 4161, a very clean, clear test of 6350, dropped to 5250, come right back up. So we have these whipsaw, continuing to have these whipsaw type moves. Pretty good play on the move down, and then that was 100% taken up. I'm waiting for this banner to move out of the way here. So you could see here, pretty good rotation down, and then an impulse up that had zero continuation, and we see an expansion of rotations to the downside right there. So we have a nice opening swing, very clean, clear opening swing, and we are stuck inside of it until we start pushing lower. And when we do, what do? We come all the way back to the open. We test the open in this chip chop zipper up here, which looked to me like it is likely to follow scenario 1 back up, and then we end up failing through. And where do we go? 41 20 50. Sound familiar? We're basically trading the same wallets back and forth, kind of just going back and forth. So we ended up getting to the 4120 target, which is the next high volume node that we would be aiming for from the 4180 and 4150. So that was pretty orderly, but look at how it closed. We had balance through most of the day, very choppy day with a break below. We end up, if I turn on the master levels, we end up putting in a single print, the start of single prints of 4133.75 right underneath yesterday's low right here. And then we end up running down and then balancing out at the bottom. This, it doesn't take a genius to see that we we chopped up here, we moved down, and we did not find buyers. So if we did not find buyers, according to auction principles, what do you think will happen here? We don't find buyers. It is likely to continue down. Remember, the market doesn't just drive itself for some random reason. You do get random outcomes, but it is performing a task just like your local supermarket is, just like eBay is, just like the Manheim auto auction in Pennsylvania does, and so on. It is trying to find prices that would entice buyers to stabilize selling, and it tries to find prices on the upside. It'll continue to advertise higher and higher prices until it finds sellers to stabilize prices, to find equilibrium. At the end of the day, the market is constantly looking for what? Balance. Here's my scales of justice, I guess. We're always looking for balance. So we're going to push on this until we bring this to a point where it exceeds a little bit. Then we'll push on that until at some point these are balanced. And that's where we get chopped. The market spends most of its time in balance. In fact, historically, it used to be about 17% historically of days would be truly trend days by definition. So the rest of the time, these days were normal variation, neutral, extreme. They were basically non-trend days. This is why I didn't put too much effort into becoming a momentum or trend trader. That number has gone up a little bit. It's around 26%. Past performance is not necessarily indicative of future results. But it has gone up a little bit with this big ass rally that we've had. But Delta moving with us. Price discovery, very successful. We have a P-shaped profile, but it's not the classic P-shape. This is a long liquidation profile to the short side. We spent most of the time. See, how we create the bars is as important as understanding the pattern or the shape of the profile. And so we move down. We are unable to find buyers, because if we found buyers, we would have one of those classic V bottom type things. We have an excess, and we did not see that. So we carry that into the overnight session. What happens on the overnight session? Between 3:30 and 4 Central exchange time, we immediately drop. We expend that energy right away. So now 4104 becomes the key price. And look at where it goes. 40, do you guys remember 4104? The little notch here. 4104 goes right to it. That's the low there. 4104 comes all the way back, almost to the high of the overnight session, and then from there, the Asian session really could not get off the ground. And what we have is a pretty sweet pattern here to the downside. We have a trend, and look at these profiles. They're very choppy, but here we have a lot of, whoa, that looks like a dude with a nice hairdo. So very choppy, but there's active price discovery. So what we see is volume at every price, a lot of volume at every price. There's no excess high, there's no excess low. We do have, let's put a cigarette on this guy here, just for good old time's sake. But a low volume node right here. Where's this low volume node? You guessed it, 40.95. Remember 40.95? That was the CPI low, and that was the next key test area. It's a low volume node on the composite. And we've created this split right here in this profile, right at this 40.94, 40.95. This is an area that I'll be watching very closely. And guess what? We have the full session mid and full session VWAP again at the 92 to 95 area. This looks like 97 because I unclicked too quickly. 92 to 95 area. This is important to watch this area today. Low volume node, full session VWAP, full session mid. So if we get responsive, which is very likely this morning, this will be the line in the sand. Okay. I know I threw in some little few jokes in there. Yes, I get it. This is very serious business, this trading business. Um, but just remember that 40, 92 to 95 area is really a line in the sand this morning. If not, then it's 20. If not, then it's 33 to 36. If not, then we're all the way back to 50 up here. So I'll outline these. Delta is negative all the way through. Big drop right here. Strong selling delta there. That looks like a stop run. And then where did we reach in the overnight session? What is the price that's important back here in this area? Does anybody remember? I can't wait for your answer. It is 40.67. Does this sound like a I know I sound like a broken record with these levels. Remember, 40.67 is the big area that the market is likely to test. That is the next microcomposite point of control. And what's the low of the session? 40.66. 40.66. There it is. This is how the auction works. Understanding volume profiling, understanding the auction can be combined with your moving averages, with your fibs, with your whatever. But if you've been here for at least the last 2-3 weeks, you probably noticed that I'm talking about the same levels, and you've noticed that the market keeps moving to the same levels, back and forth, back and forth, back and forth. And it's not random, right? It's not luck. 40.79, 50 is the high the other day. What's the level up here? 41.80. Oh my gosh, 41.80. We love this level, 41.80. So this is where we're going. We're going from 41.80 to 40.67 with a small pause at 94, with a small pause at 20 right there, with a lot of trading at 50 right there. Come on, guys. It's the same thing over and over and over. So it's really worth your time to learn and understand the auction. I know people think, oh, it's too discretionary, it's too this, but if you don't understand what the market is achieving, then it's really hard to hang on the trades. So yesterday we came in and we had a higher low, lower high to Friday. To Friday on Monday, and then on Tuesday we had a lower high, higher low through most of the session. We were stuck in the 43 area or so, and then we finally broke out. And this is what we wanted to see. We filled the gap, filled this gap here, and we moved to 41.17 immediately in the overnight session. And then from there, it becomes all about moving to 40.67. 40.67. Voila. 40.67 is where we are now, with 40.95 being the overnight low on the CPI release. That's where the V bottom was on the CPI release. And with every V bottom, once you start chewing through the excess low in a V bottom, like the strong move up from a V bottom, there's a high probability that you would run right through to the bottom, and that's 40.95, and that's what we did in the overnight session. So a lot was accomplished in last night's overnight session, believe it or not. And so we are moving to the low end of this expanded range week last week. This is ominous. This is a threat to all longs. Okay. The order flow this morning looks, well, let's go over the overview chart here on Edge Pro X. Again, you can get this platform at edgeprox.com. On Edge Pro X, you can see that pretty much everything is getting hit. This is down, but the currencies are still quite strong, right? The euro against the dollar, relatively strong. The yen is pushing up. It's kind of inverted versus the other currencies. The Swiss franc is inverted as well. So it's kind of moving in the opposite direction. But you can see that overall, it's there. There's a response that is fundamental in nature. Here's the crude oil spike down on the news that Iran is now able to export, is now permitted to export its first crude oil shipment from Jask in June. So there's supply coming online for crude oil, and that is putting downward pressure on that product. Gold has been moving down and has rotated back up. It's a safety instrument, and so on and so forth. The notes, if the notes fall today, then yields are going higher. Yields are going higher, and so on and so forth. What is going on with the heat map? I have filtered out the large lots. So I'm removing all the large lots, the small lots, and I'm only showing the 98th percentile of the bid ask to kind of help clean this up, just to see what is there. And I'm going to tell you yet again, there's not much here. There's some at 40.50, which is a major strike. There's some at 40.45, another key strike. Remember, the option strikes are every 5 points on the outright option. 40.65, there's some size there, but this there's a lot. Look at these double digit offers. There's a lot of just riffraff on the tape, so it's quite thin. So expect this morning. What does that mean? Cool, great. You show this as platform, awesome. But what this is actually showing is that this morning is likely to be quite volatile. We're expecting a fair amount of volatility this morning. You could see the profile here. I need to work on this, make it a little less opaque. But you can see the profile here is very blunt. It's very blunt. The volume profile, quite blunt. We're well ahead of our VWAP, as the other chart shows, and then the cumulative delta is taking a beating, and took quite a beating on this move down right here, on this spike down. This is a 15-minute chart. Let's move on and look at, it's getting really late. Let's move on and look at what's expected for today. All right, so what are we looking for today? Today, currently inventory is about 85% short. The point of control is near lows, on a very, very weak low. The expectation is we open, we immediately spill over. We're starting to approach the weekly low from last week. Very dangerous area for the sellers, but I'm looking for this to push down immediately and respond. Push back up to the 40.83 area, consolidate up here, chop for a little bit, and push back to 40.95. I'm expecting this 95 test at some point today. Okay, this is scenario one: a push down, finding buyers, then respond to the upside. Remember, the overall trend is still relatively strong in the on a swing basis. Secondary, open, test back up to the 83, impulse down. And this scenario, if we test higher and we fail to find buyers, and we fail to push the sellers back, this scenario is very, very likely to introduce really wide range and volatility, and we are likely to target all the way down and take out the 40.38. So down here, 38 is important, 14 is important, the 14 right down here. Above here, 20, 20. Above that, 33. Above that, 50. We're unlikely to breach the 20. I think the last I looked, the historical probability of filling the gap zone today is around 18%. Past performance is not necessarily indicative of future results again, but we are likely to take out this gap zone today. That's scenario two. We're out of balance. There's scenario three, but I'll let you come up with that. I want to also remind you that today there's an AMA at 4:30 Eastern. The link is right there. I'm going to drop it into the chat box so you can join us. It's about making a turn. If you have questions you want to pre-submit because you cannot attend, make sure you register anyway so we can send you the recording, and then submit your question as a comment on this page, and I'll try to answer it while we're doing this webinar. Good luck, everybody. Take care.